Jay Powell has no idea what it's like out there. None. And Neil Kashkari has no idea how bad it is out there. They know nothing. These are the famous words from Jim Cramer, the famous anchor at CNBC. And if you're old enough to remember this, you probably know when this happened. This was back in 2007, I think middle of 2007. I actually happened to watch it live on CNBC. This was right before Bear Stearns went under. He was pretty animated, and he was talking about how Ben Bernanke at that time, who was the Fed chief, needs to open the discount window, basically lower the rates. And that rant kind of resonates me with what's going on today. Obviously, things are very different. Back then, it was a banking crisis, and Bernanke, who was the Fed chief at the time, was not ready to decrease the rates because of the fear for inflation. Now, in this case, Jay Powell, obviously, who is the current Fed chief, has some of the same qualities in the sense that he's just being an academic like Bernanke was, but even worse. So what I mean by that? So let's evaluate what's going on right now. Till last year, no, let's start from 2020. When the pandemic hit. Right after the pandemic hit, Jay Powell, he did the right thing, lowered the rates drastically. There was a lot of quantitative easing, and then the government also pretty much gave free money. And it was kind of understandable because people were suffering. We had shut off the whole economy because of the pandemic, and people needed money to survive. So in retrospect, that move seemed like a most logical thing to do. And in response, the markets came back after a pretty steep downturn, and it was pretty much a V-shaped recovery. Once it came back, the past couple of years have been pretty good for the economy. The stock market has been going up. The real estate market has been going up. Everything, name it, crypto, gold, pretty much each and every asset class has been going up. And one of the primary reasons for that is the amount of liquidity, or the amount of money printing, so to speak, that has been pumped into the market. Now, there were a lot of telltale signs, especially when the government did those couple $1 trillion worth of distribution, pretty much in 2021. It was pretty clear that the inflation was going to be a problem, and pretty much every financial analyst that was coming on TV, or any economist worth their salt, were talking about it pretty much all through end of last year and early this year. And in that time, what was Jay Powell doing? Na 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 na. I don't want to listen to you. Na 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 na. Well, he said the inflation is transitory. And he kept on delaying it, saying that, hey, it is just the supply chain issues, and this is not going to last long. And once the supply chain issues were resolved, the economy would stop inflating. And so he kept on with the easy monetary policy all the way till the first quarter of 2022, when pretty much everybody was saying, hey, stop this, there's inflation and you need to raise rates, but he just wouldn't have it. All these quantitative easing and lax monetary policy, the market responded as it should have. The real estate market exploded, and I, being a real estate investor and a real estate agent, I saw the market just went ballistic. I live in San Francisco Bay Area, which is already a very competitive market, and so there's already a lot of competition, even under normal circumstances. You typically every house gets about 4 to 5 offers, and the offers and the homes go over asking, and that's a pretty normal market. But what happened in the past 18 months was just absolutely insane. I've never seen anything like this. I mean, I know agents that have been in the real estate business for over 30 years said the same thing. Even 2006 pales in comparison with what happened in the last 18 months. The homes were going 400, 500, 600K over asking. If you remember, there was one home in Berkeley that was listed for $3 million. Somebody paid $1.5 million over asking. It sold for $4.5 million. I mean, it was just insane what's going on in the market. And the same thing applies to stocks and crypto and all sorts of other asset classes. And it was a very rational behavior based on the easy monetary policy. So, and at that time, Jay Powell was not ready to listen to anybody. He was kind of like a drunk person driving a car, and he had he had moved the steering all the way to the left, and everybody was yelling, "Hey, move, move!" And then he was like, "No, it's fine, everything is good." And then when the inflation hit in the middle part of the year, suddenly it was we were talking about 6-7% inflation, and in August it was, I think, over 8%. I mean, and when that happened, Jay Powell really panicked, and then he started raising rates like a madman. And last week, when he raised the rates, he raised it by 75 basis points, and then he said there's going to be 2 more rate increases amounting to 125 basis points, basically 1.25% more. And so this is basically taking moving the steering all the way to the right, and now it's going to hit the curb, and the car is going to crash again. We are in the same boat, but just in the opposite direction. But this time he seems to be pretty determined to crash the economy and make sure that wage inflation, which means basically wants people to lose jobs so that wages come down, and that brings prices of goods and services down. Now, one of the things that even a lay economist, I'm not even an economist, I mean, I just follow it and have read about it, but under normal circumstances, it takes about 12 to 18 months for the monetary policy to be reflected in the actual economy. And Powell is talking about, he just started raising rates in March, April, and even those were like really 0.25% or so. And now, after raising it by 0.75, he's expecting that the inflation should come down immediately. I mean, that's not how this works. I mean, it's economy like a freight train. It takes time for it to move. It really happens in slow motion. So whatever he's doing right now, the repercussions of this will be seen in about 12 months. And so, the bottom line is the guy is not doing his job. If you look at the reason why the Fed was created in the first place was to make sure that these type of things didn't happen. There was a steady employment and the inflation was in control. But instead of that, this guy is just kind of reacting to what's going on. I mean, the expectation is that with all their PhDs and all the qualified people that are in the Fed, they should be forward-looking and so kind of try to predict what's going to happen in the future. Instead, Powell is looking at the PCE, the personal consumption expenditure, which is probably the lagging indicator of all, and he's looking at it and he's like, oh, this is not coming down, so I'm just gonna keep the gas on the pedal. And so I think we are heading to a disaster. This is going to cause a lot of pain, which is what he is really trying to do. I mean, he came openly on TV and said, hey, things are going to be bad and a lot of people are, going to lose their jobs and the economy would be in a tough spot next year. And one of the reasons or the repercussions of these is that because the interest rates have gone up, the dollar is becoming stronger and stronger, and this is affecting all the other currencies in the world, including the Japanese yen and British pound and euro and everything. And I do follow rupee. I'm originally from India, so obviously I keep a close eye on rupee, and that has been also falling precipitously, and everybody is just panicking, and nobody knows what to do because this is something that has never happened before. I mean, there's always currency fluctuations in the market, but the way and the speed with which this is happening is just like it's the whole thing is we're watching in fast forward mode, and so this is not going to end well, and this is going to cause a pretty deep recession next year, unless the Fed decides to pivot and say, you know what, what we are seeing is, things are going to get bad, and so let's look at whatever actions we took now. Let's wait and see what happens in the next few months. But looks like Jay Powell is not in a mood to see that, and he just wants to crush the economy and bring the inflation rate of inflation down. I'm already seeing the effects of these rate increases, because the average rate has touched or even crossed 7%. And if you're an investor, you have to pay almost 8% to purchase a house. I mean, these are numbers that we have not seen in decades. I mean, in decades. I remember 7% was probably in the early part of 2001, if I remember correctly. 2001, 2002. That's when we had last seen rates in 6 and 7 range. And so going from 2.25 in March, we are talking about 7% in September. That is insane. That is just the immediate effect of this is that the whole real estate market is completely frozen. Nobody's buying houses or selling houses, and it's just wait and watch. And the reality is that buyers are not able to afford the houses at the current prices. And remember, the real estate is almost between 15 to 20% part of the economy. And if that freezes, there's a lot of other things that are related to that. Now, listen, I'm not saying that I support inflation. I want inflation. No, who would want inflation? I mean, what you're paying for the gas and groceries and everything. I mean, the groceries are up almost 30% from what we were paying last year. But my point is, if Jay Powell had done his job and started raising back in August, September of last year, we would have already had a pretty decent slowdown early this year, and not see the explosion in the stock market, in the real estate and everything. That the whole thing would have been avoided had he been more futuristic, which is what he's being hired for. And if he had done his job, then we would not be facing what is going on. And so, a lot of people are actually happy that Jay Powell is doing what he's doing right now, saying, hey, yeah, he's doing what Paul Volcker did in 1982. But there's a lot of differences. I mean, one of the biggest differences is back in the 70s, the inflation was going on for almost 15, 16 years. And when Paul Volcker came, it was really super high. And there was other things, differences also. There was the U.S. Debt was not as high. The demographics were much more favorable, and so on and so forth. In this case, the Fed has barely raised the rates for 3 or 4 months, and they are expecting the inflation to come down. I mean, it's not going to happen. It's gonna, these rate increases need time to move through the economy, and once they start, and we're already seeing that a lot of the numbers are already beginning to come down. The PC is probably going to be the last thing that is will show improvement, and so. I think we are heading into a disaster that was pretty much caused by incompetence of the Fed. And really, Jay Powell should, as Jim Cramer put in 2007, they know nothing. And that's the bottom line. Let me know what you think about the video. Like and subscribe, and I will see you in the next one. Bye.